Hello and welcome to Business Agent. This is Dr. J, your daily window into the world of business, startups, and technology. Today we've got a mix of big money investments, economic warning signs, startup success stories, and shifting global strategies. From NVIDIA's massive bet on self-driving cars, to the UK's rising debt problem, to a new US-UK tech alliance, we're covering it all. Let's dive straight into today's headlines. NVIDIA, the global leader in AI chips, is reportedly preparing a $500 million investment into Wave, a UK-based self-driving car startup. Now, Wave is not your typical autonomous driving company. Instead of relying on pre-programmed maps, it uses cameras and advanced machine learning to teach cars how to adapt to real-world conditions, almost like how humans learn to drive. This investment would be part of NVIDIA's larger £2 billion commitment to grow the UK's AI and startup ecosystem. If finalized, it would be one of the biggest single bets on a European self-driving technology company to date. For the UK, this is a strong signal that it wants to remain a global hub for artificial intelligence and automotive innovation. Story 2. UK borrowing at 5-year high. While big tech money is flowing in, the UK government's finances are showing warning signs. In August, government borrowing soared to around £18 billion, the highest August figure in 5 years and far above what economists were predicting. Even more concerning, personal insolvencies in England and Wales have risen 16% compared to last year, with debt relief orders now at record highs. Markets are nervous, the pound has slipped, and government bond yields are ticking upwards. For businesses, this could mean higher borrowing costs ahead, and for households, the possibility of higher taxes or reduced government spending. It's a reminder that even as we see tech growth, the wider economy is still under significant pressure. Story 3. Nothing raises $200 million. On a brighter note, UK startup Nothing has just secured $200 million in new funding, led by Tiger Global and other major investors. This puts the company's valuation at around $1.3 billion, officially giving it unicorn status. Nothing, which makes sleek smartphones and earbuds, sold about 7 million devices last year, a growth rate of 150%. The company is on track to hit $1 billion in revenue this year. Beyond smartphones, founder Carl Pei is teasing moves into AI-integrated hardware and even robotics, setting Nothing up as one of the few challenges to giants like Apple and Samsung. It's rare to see hardware startups scale this quickly, and this could signal a new wave of European tech hardware innovation. Story 4. The UK-US Tech Prosperity Deal. During President Trump's recent state visit to the UK, a major agreement was unveiled, the so-called Tech Prosperity Deal. This partnership brings together American tech titans like Microsoft, NVIDIA, Google, and OpenAI with the UK government to accelerate investment in AI, quantum computing, and civil nuclear technology. We're talking about billions in planned data centers, new GPU infrastructure, and large-scale workforce training. The idea is to turn the UK into a true AI powerhouse in Europe. But there's a flip side. Some critics argue this deep reliance on American companies could weaken the UK's control over its own digital future. Is Britain building sovereign AI capability or outsourcing it? That debate is only just beginning. Story 5. The sovereignty question and scale. That debate takes us to our next story. In scale, a firm central to the UK's AI infrastructure strategy is widely presented as a British AI company. But recent reports reveal that Nscale is entirely owned by an Australian parent company, Archon Energy. Now, this isn't necessarily a problem from a business standpoint. Global ownership is common. But when governments are promoting sovereign AI infrastructure and pouring public funds into it, questions around who really controls these companies matter. It's a case study in the fine line between branding and reality. and why transparency is essential in tech policy. Story 6, Inclusive Innovation, Tech Nation's CREO Cohort. On a more positive note, Tech Nation has announced its CREO 2025 cohort, featuring 16 startups founded by disabled entrepreneurs or focused on innovations around accessibility. This marks a growing recognition that tech should not just chase profits, but also create solutions for people who are often overlooked. It's a reminder that innovation can be inclusive and still scale commercially. Story 7. Venture capital expands beyond traditional hubs. Finally, in the world of venture capital, veteran investor Jack Selby, a close associate of Peter Thiel, is doubling down on non-traditional tech hubs like Phoenix, Arizona, and other US cities outside of Silicon Valley and New York. The reason? Lower startup valuations, untapped talent pools, and new regional opportunities. We're starting to see a shift where great startups don't have to be born in San Francisco, London, or Berlin. They can come from anywhere. And for entrepreneurs, that's an encouraging sign. Let's recap. NVIDIA could pour $500 million into a UK self-driving startup. The UK's public debt is hitting worrying levels. Nothing is scaling to unicorn status with a 200 emitter raise. The UK-US tech prosperity deal promises new AI and quantum investments. But sovereignty questions remain with firms like Enskull. Tech Nation is shining a spotlight on inclusive startups. And venture capital is flowing into unexpected places. Business isn't just about money, it's about risk, resilience, and reinvention. And that's exactly what we'll continue to cover here on Business Agent. Thanks for watching. Don't forget to like, subscribe, and share. And I'll see you in the next update.